Hi, everybody. This is Kara Thrasher Livingston, and I am here to welcome you to our webinar today with Lynn Kyleman Cruz, our Chief of Quality. We'll be talking about the American Rescue Plan Act, Section 9817, the Direct Support Professional Incentive Fund, and to learn all about that and, importantly, how to apply. But first, a couple of words before we start about how to get the best out of your webinar. You have entered as an attendee, and that means that your audio is muted, but you will be able to write in the chat area. So you should see a couple of little icons that allow you to either open a question box or it might say chat. And you can write in there and type us your questions as the presentation progresses. Feel free to write in at any time. We will have a short presentation that explains this important topic, and then we'll have some time for Q&A at the end. And we'll do our best to get to your questions. If we have many questions that have the same theme, we do summarize them. So if you don't hear us read out your exact question, don't worry. All of our questions are collected in all your text chats are collected, so we can keep them for future presentations or answering at another time. You are hearing us either through your computer's audio, or perhaps you may be using a phone for audio. Either one is okay. If we happen to disappear during the webinar, it just means that we have lost connection. So stay in the webinar and we'll come back through the link to this virtual room. If you happen to lose connection during the webinar, it's okay. When you get connected back to the internet, just go back to your email, your original link, and use that one to rejoin, and we'll see you back into our session. It doesn't happen a whole lot, but every once in a while, our internet connection can break. This presentation will be available on our SDS Training YouTube channel. Give us at least an hour after the end of the presentation to get it up there and able to share with everybody. In a minute here, I will drop our YouTube channel link into the chat area for everybody to see. So if you would go ahead and practice for me a little bit, so we know that you're able to interact and you can find these controls. If you can find the chat area, would you please just go in and say hello and chat anything you'd like. Tell us hi, tell us what the weather is like where you are. Of course, here in Anchorage, it's sunny and it's a beautiful day and a wonderful Friday. Go ahead and give us a few hellos. Once I see many of us participating, I'll know that you can hear us and see us and use that control. Awesome. Okay, good job, everybody. Like I said, please feel free to write in your questions as it progresses and know that they'll be recorded. And even if we can't get to all of them, or perhaps some of them are off topic, we do have record of them so that we can address them in the future. Okay, with that, I will hand it over to you, Lynn Kyleman Cruz. Go ahead, Lynn.
Thank you, Kara. Appreciate you and helping me set this up. As Kara mentioned, my name is Lynn Kyleman Cruz. I'm the Chief of Quality here at Senior Disability Services, and I have the pleasure and ability to sort of take the lead on getting this fund set up for support of our direct support professionals. And first, wanted to really thank our division partners, healthcare services, our financial, Medicaid services folks, for helping to figure out all of the things that go on behind the scenes to make something like this happen. There's a lot. And so just wanted to make sure I included all of our department partners. And then also wanted to thank all of you for everyone that has sent comments and feedback to our ARPA mailbox. I hope that you'll see with the instructions that we're going to go through that we really have tried to take a lot of your changes and be as flexible as we possibly could, given the extremely short timeline we have for execution of the project, and also to continue to meet the requirements for our federal partners. So again, just thank you so much for all of the feedback that we received. It was very, very helpful. So I'm going to go ahead and dive right in. And so some of the things that we wanted to talk about today, or I wanted to talk about, are what I hope you would expect to achieve by coming to a webinar, is to gain an understanding of the intent of the funds. I've gone over that a little bit before, but just want to touch on it again. And then we're going to view some of the finalized forms, and I will give you instructions on completion of the forms. Try to make them as simple as possible. And then we're going to review very important dates and give you an opportunity also to ask some questions at the very end. We have an hour and a half, as I think Kara mentioned. If we don't need all of that time, we don't have to use all of that time, but I wanted to make sure we had enough to really dive in as much as we can get you answers today and get you answers. Please don't wait once we're done with the presentation to reach out if you have any questions about this, because the sooner you get back to us with your questions or get your questions answered, the better off we will all be. I'm hoping by next week we will also have a short-term non-perm person hired that will help us to make sure our response times are really good for you, because it is a very, very tight timeline, and we recognize that as well as you do. So the first thing I wanted to sort of go over are the state requirements. So there are some things in this particular project that we could not change. One being the spending plan. So we, under the American Rescue Plan Act, we could submit a spending plan telling CMS how we wanted to spend this 10% savings, financial participation savings, and we decided to do it in 3 projects, this being one of those projects. So the other thing that we have to do is we have to file quarterly reports to CMS saying when we've made changes, what we're doing, how much money we've spent, and how it's going. The third thing is that the base period claims calculations, the federal government, CMS, actually set this base period. And so that's really the driving force for how we determined who could be eligible for this project and how we would distribute funds from this project. So the next thing we had to do was develop the process for implementation, which is really where you, many of you have helped immensely. And I just can't tell you how much I appreciate receiving feedback from you. It really does help shape our process. The other part is, of course, what nobody ever really wants to talk about, which is, from a federal perspective, one of the most important things is the audit trail and documentation of how we are, how are we distributing funds under the project, what are our requirements, and how are we going to ensure that each provider meets those requirements. That's an important piece, and it's a hard part of my job, but it's also a good part because it, you know, we have a clear plan and we try to be as transparent, or are trying to be as transparent as possible on the front end. So you know what to expect. We know what we're going to expect from you, and we're able to show to CMS that we know what we're doing. We're doing a good job. So the real intent of these funds is to support an exhausted workforce, encourage retention, and allow you to really invest, if you haven't already, to invest money into the workforce. So I think in the first webinar that I did, I wasn't maybe perhaps clear enough that if you had no eligible expenses during the base period that we'll talk about, if you're spending money now, you can be reimbursed now. It just won't, the reimbursement won't come until sometime in December or January. So we're looking back first, and then we will look forward. So we have reimbursement for a retroactive period where we didn't even have our criteria developed, but that is the base period that CMS set for us. And so looking back to determine if we could pay you some money that you could actually be reimbursed for right now, and then you can reinvest that money for future expenses. And I think that's all I wanted to say on that one. We have approximately $20 million to spend in this project. We at the state have to be very careful about how we distribute the money. So the first allocation will be based on $18,500,000 because we always have some adjustments on the back end for late filing and tribal reclaiming, and trying to think of the other things that we have to consider for the state. And so we are going to base the first allocation on $18.5 million, and then we will recalculate, and whatever money is left over, we will try to redistribute very quickly in a second allocation. So the first thing, the eligibility to participate, you have to meet all 5 of these requirements to be eligible to participate in this program. The first one is you have to be certified as a home and community-based service waiver provider. You have to be enrolled in Medicaid. And when we say active, you'll hear me talk about active. That means certified and enrolled. That's what we deem active. And you have to be both certified and enrolled to be active, and you have to have been active during the base period. And again, that base period, April 1st, 2021 through March 31st, 2022. You had to have paid claims during that base period for the types of services delivered by direct support professionals as identified in Table A. And I will show you Table A in just a second. The other part is at no point in time will we pay an inactive provider. So if you spent $2 million on influencing your direct support professionals and really beefing up, and then you go out of business, we're not going to take money from this fund to reimburse you. We're going to distribute among active providers because we want current or future DSPs to come into the workforce. This is the eligible service types, Table A, that I spoke of earlier. So if you are a provider of any of these types of services, you will be eligible during that base period. If you were a provider during that base period and you remain active, you will be eligible for some funds for reimbursement. The one thing that will be changed on this from my first time that we went out is that we removed Pioneer Homes, any state-run programs, from being able to participate in this fund. So that means the approximate $20 million will go to private entities, nonprofits, and not a state-run program. So that was one change we have made. With a finite amount of money, we want it to go out to you folks. So this is where we received a lot of comment, and which is very good. This is what we wanted. So all of these categories are really the incentive fund definitions for the types of eligible expenses you can hope to be reimbursed for. And we received a fair amount of comment, and it was all really good. So I hopefully I got back to everyone. We tried our best to bring that back to our internal group, get an answer, and get out to you or make changes here as we needed to. So the very first one we wanted to talk about was bonus pay. You can see the definitions here. We tried to give a definition under these categories so you would sort of understand what the basis of the bonus pay or whatever the category is, and then also the supportive documentation that we hope that you can produce in an audit. So a lot of people asked about bonus pay that maybe didn't have, it didn't exactly meet a criteria for providing support to a recipient who are at high risk of COVID. These are some examples, but working extra shifts due to the agency being short-staffed, those are important. You as an agency, you determine what you're going to pay a bonus on. We did have some people tell us we should set a ceiling on the amount to $1,000 per employee. We elected not to do that, assuming that every agency would probably have some kind of criteria for their own agency, and everyone does it a little bit different. And so we decided to be a little bit more open about that. And hopefully, you know, people will be fair and be able to have the types of evidence that would support bonus pay. The next one is a referral bonus. So in our original webinar, we had left this off, and this was a comment. Someone said, hey, you left this off, and we paid referral bonuses. So I just wanted to point out that we added that back in, and also let you know that that this is for referral of potential employees and never, ever for referral of potential recipients. Remember, you can't buy recipients. And so we would never make a payment to you or a reimbursement if that's what you were making a referral bonus for. And it has happened, and it is not okay to give a referral for a potential recipient. It is okay to do a referral for a potential employee. So I just want to make that very clear. Recruitment bonus, we did receive some comments about this as well. This seems pretty straightforward. It's a hiring bonus, a sign-on bonus, a recruitment bonus. Obviously, once a person signed on, you wouldn't give them this kind of bonus again, so it's a one-time payment. Retention bonus, we were trying to stay in alignment with what CMS asked for here, which was that you wouldn't give this to someone that signed on day 2 necessarily as a retention bonus because they haven't been with your company for very long. So we did change the language slightly to say for at least 6 months or demonstrates commitment to the company. Because you could have someone say that was with the company for 3 months or 4 months that is talented and is dedicated, and you feel like, man, we really want to keep this person around. So we felt like you could make that decision as a agency owner to offer a retention bonus, and hopefully that meets your needs and still meets the definitions for CMS. Overtime pay, this one is a little bit different. So in this particular one, we had a lot of people say, you know, we can't really go back. It was such a fast and furious thing trying to, you know, staff homes and make ends meet and figure out your staffing during COVID. And I can totally relate and understand that. And it seemed very, very reasonable to me that that would be difficult. So we brought this back to the group and we came up with this idea. And then another provider actually offered the same idea. 2 providers offered the same idea. So I think we're on the right track here. And I think one of the ways that we changed this is we did say you could have an annual difference, an annual difference of overtime between the period pre-COVID. So if you did a report, and you could pull a report on all of your overtime you paid pre-COVID, say between April 1st, 2019 and 3/31 of 2020, right when COVID was hitting, and say you spent $30,000 in overtime, and then you compare that to the base period, which was 4/1/21 through 3/31/22, and you spent $65,000 in overtime, you could claim for reimbursement $35,000 because of that's the difference between a $30,000 and $65,000. The difference is $35,000. You could claim that for reimbursement because we could pretty much guarantee it was because of COVID. You had staffing outages. It wasn't regular built-in overtime that you would normally pay. So hopefully that will meet your needs and also make it a little bit more flexible. This still will be a category that we will highly scrutinize. So I would suggest, if this is the method that you want to go with, that just like when you prepare your taxes, before you file your tax, you have all your receipts all together, you have your reports together, you have your claim and mileage, you have your mileage plan together, your mileage log together for your taxes. At least I hope you do. I would suggest you do the same thing for this particular fund. Because when we come out, we're going to be just like the IRS. We're going to say, show me these two reports that shows the difference between what you paid. And I'm hopeful that you all will have that ready and available for us. Hazard pay is pretty self-explanatory, I think. I won't go into too much detail on that. Pay for COVID needs, I think that's pretty clear. We didn't get a lot of comments about these. Shift differentials, the same. If it's during a regular schedule and you're paying shift differentials at a regular rate as a regular part of your business, those are things that you would not claim. If it's you paid shift differentials because of the pandemic, or you noticed you had a lot more shift differentials being paid, you could, if you have evidence of that, attribute that to a pandemic reason, you could claim for that. Personal protective equipment, self-explanatory. I don't need to go into that. Vaccine incentives. If you were offering a bonus for people to go, or you were offering paid time off for an employee to get a vaccine, we would reimburse for that as well. The one thing that I did get a comment on was that maybe we weren't clear about the fact that avoiding duplication, that all of those reimbursement categories are subject to looking at duplication, meaning that if you received CARES Act money and you paid a retention bonus with the CARES Act money, or I'm grasping for examples right now, for any of these reasons, if you use money from other sources, or you were reimbursed for PPE from another type of fund, you can't reclaim it now. Going forward, the good thing is you would be able to do that now, because these other funds, I'm assuming, are no longer in existence. So for this base year, if you had $0 spent in that base period because you feel like you were reimbursed through all these different methods, then please apply still. We will roll over those funds and you can use them going forward where none of these other programs exist. At least that's what I think. So I hope that made sense for you. Calculating the first allocation. So again, this is a brief spreadsheet of how we calculate the allocation for each provider. And the methodology for how we determine that, it is, I have given you examples, I've given you more language about it. It will be in the procedures to implement ARPA, Direct Support Professionals Incentive Funds. So there will be procedures that will be mailed out to you that will explain how we came to those allocations. I haven't gotten any questions. I think most people understood maybe, or felt like it was pretty clear about how we were allocating. So I hope that that answers your questions. If not, please reach out. We will, once we have determined the allocation, which I think we're very, very close to having that full amount figured out for each provider, then we will be noticing next week every eligible provider with their first allocation amount. And then we will also provide the links to, or not the links, we will provide the forms to you for the application and the attestation for you to be able to apply. And I'll go through that in just a minute here. So, application to participate. This will be the only way for people, for the department to accurately track the funding is through the application and attestation process. So it's super duper important that you apply. Even if you had zero expenses, that you apply by the deadline. The deadline now is June 30th of 2022. Not very long, less than a month away. So each enrolled and certified Medicaid provider will have to submit the attestation form, and it has a number of things on it. I will actually show you the form here in just a few minutes. The application will have the application form along with the attestation form will have some fields you'll have to fill out. The most important thing to remember is that the eligible expenses will be by quarter, and we would like you to fill out each quarter and then summarize in a total sum, and I'll show you that in just a few minutes. So the other thing to point out is that if you're an agency that has multiple provider IDs, so say Lynn's agency has 5 different Medicaid IDs because I have 5 locations. I have to submit an application and attestation for each of those IDs. And it's really important that we do that for audit sense on our end. We can keep it very, very clear and separate. Whether you pool your own resources or I'm not sure how you would do that, but we need them separate. And so I just want to make sure it's very clear that the attestation, the application form is for each Medicaid ID, enrolled ID. Again, the deadline is June 30th, 2022. And again, I'll say this a zillion times, I swear, through here. Providers that had 0 eligible expenses during the pay period must still submit the attestation and application form. Just put zeros all the way through it, but you must submit it so that we know you want to participate in the next fund. Otherwise, we're going to remove you from the applicant pool, and we're going to redistribute whatever was set aside for you in the first allocation. We're going to redistribute that to active providers that want to participate, because we want to spend money on the workforce. And it's super important that you pay attention to that. And I'll say it 5 more times probably before I'm done. The Medicaid Management Information System is the system that we will be using to distribute the funds. So I wanted to make sure that I let you know that if you have an electronic fund transfer, don't ask us to send it to a different address. We're not going to. If you have a current system address in there that's receiving funds different than an EFT, that's the way it's going to work. We're not changing that. We're not sending to someplace else because you want money in a different account. It is going to the account in that Medicaid enrollment IDs. Whatever's listed for that ID is where it's headed, the money. The other thing is, if you don't currently have, or you don't have a current MMIS authorized agent, you will need to update it. And I will just tell you, by looking at the forms, I saw several that I know that person is no longer with the agency. And that's going to be a problem for you if you're applying and you haven't updated. It's your responsibility as a provider to go in and update the MMIS with who is an authorized agent for billing for your agency. That is where we are going to email the authorization letter, and that is where we're going to email any kind of issues, and that is where you're going to receive your payment is through that EFT. So if you have any doubt, you might want to go in and take a look and see who you have there. And then you can, here's a link to the form itself that you can fill out. And Tracy Marshall is kind enough, or her boss is kind enough to be standing by for us to be able to update these forms very quickly. So beginning on Monday, she's out till Monday, but please don't wait. Don't wait till June 29th, because the state can't turn it around that fast. So you really need to take a look right now. If you're on the phone and you don't know, please go in and take a look and try and figure out if your folks are updated. Super important. So the attestation form. The attestation form, you've probably seen a lot of these in years of doing business with us. There's not a lot different in it, except that it must be signed by that agent authorized in the MMIS. And if that's the owner of the company and you're the agent, great. If you're the owner and you have someone else that's an agent in MMIS to do your billing, then that person is going to be signing the form. And you, in the form, in the attestation, we're asking you to go in and make sure that you have read the procedures to implement this, that we will also send out to you, that you're certifying your agency is currently active, that you have reviewed the eligible definitions of expenses that we just went through and that we asked for comments on, and that we will also send out to you. It'll actually be embedded in the procedures when they are finalized to send to you. We will ask you to sign a statement regarding unsworn falsification and perjury. That's fairly standard, saying that you know you're not lying to us. You're going to sign. And then also you acknowledge that you could be audited with the use of these funds. So those are that is the attestation form. And let me see if I can pull that over for you to be able to see it. Kara, can you see this form?
Yes, looks good. Yes,
great.
We can.
So this is the form itself. We have made these fields fillable. Thank you, Dee and Juno, for helping us make this form fillable. So here, I would want to put my agency's name, Lynn's, if I could do it right, Place LLC. If I'm an LLC, I want to put it. If I'm not, I want to put it. I want to make sure I'm doing that correctly. I'm going to just throw in some numbers here because, you know, I don't know my ID number. Again, Lynn's Place, LLC. And here's where you're acknowledging that you've read You understand the guidance in the procedures. You're currently active. You have reviewed the definitions. You're not going to lie to us. You're going to tell us the truth. You understand you're going to be, you could be audited. You're going to sign here. We have it, a fillable form, so it will actually go in and put in the form itself. Once you save it, it shows up there. I won't bother doing that. And you can sign it, print your name and the title, which again is your MMIS agent. And then you would sign the attestation and submit it to the ARPA mailbox with the application for the fund. So that is pretty much the attestation. Pretty simple, that one is. Let me also go in while I have it open and show you the application. So this is the application, and it's, again, basically the same. You're going to put your legal name, your enrollment ID number, and somehow this didn't, oh, they fell down. We will fix that. There should be a fillable form here, so it should be up. We will figure out how that went wrong. It's probably me making a last minute edit. Before we send it out to you, we will fix it. This is the form itself, the part where you're going to put in your amounts of that you want to be reimbursed for. And as you can see, if I put in here $12,000 and $4,000 and $2,000, it adds it up for me. And maybe down here, let's say, put in 33,000. It will give us the total at the bottom. And again, we have a system in place to make sure that even if this $51,000 is what you spent in that period, if your allocation is $30,000, we're going to not exceed $30,000. So you would be reimbursed for $30,000 and not $51,000 if it would exceed your allocation amount. And then your fund in the first allocation would be exhausted, and you would only have available funds with whatever remaining reimbursements that were able, or remaining funds that would be redistributed from people that don't participate, or after our adjustments, we have maybe another $1 million to put it back into the fund. And then those would be also redistributed across all the providers. And that would be something that you would get in your second allocation if you had exhausted all yours at the end of this one. So those are, oops, I'm sorry. I'm just trying to get rid of this. Let's get rid of it. So that's the attestation form and the application form. We tried to keep it as simple as possible. And again, I'll repeat one more time, maybe even a couple more times. If you had $0 in expenditures, you must still apply by June 30th of 2022, or you will be removed from the pool. That's the only way we know to read who and how much money we can redistribute to everyone for their expenses they're expending right now in the second year of this project, which is right now. So it's really important that you don't forget, apply if you want to be considered for any future allocations, apply by June 30th of 2022. Again, submit by June 30th, 2022. My hope is that when you go to bed tonight and you're laying in bed and you close your eyes and you start to drift off, that 2022 is scrolling across your eyelids and you're dreaming about the deadline for these ARPA funds, because I think it's that important. Both of the forms should be submitted to hss.dsds.arpa@alaska.gov. That is our mailbox for this entire fund. Don't email to me separately at my personal address, because I will maybe not see it. That's what I worry about. And so this is our address, and I hope that people that have written to the address have felt like we have been very responsive, because we have tried to do, take your questions, go straight back to our internal work group, and come back and answer the questions as quickly as we could. So please use that to submit your forms. What's next then? Getting to approval. I apologize, I did this last minute, this slide, and these aren't showing up very clearly. But we are, so the provider submits the attestation application by June 30th. Again, authorized MMIS user, your qualifying expenses by quarter on the application. You submit both, even if you had no qualifying expenses in the base period, if you want to be a part of this project. STS will get this. We'll check for active credentials. We'll make determinations. So when I say that, I mean if you submitted something like in that example I gave, you had 51,000, but your allocation was 30, we're going to approve you for $30,000. And we're going to enter information into a notice, prepare that. We're going to send it to you to tell you how much we paid, and we're going to send it to Healthcare Services to cut the check. They are going to also check for active credentials before they write the check. They will prepare the check right in August, and then they will notice us with who they've sent money to. Cashing the check seems like that would be the easiest part of this whole thing, but that sometimes is what holds up a project like this. So this is a short project timeline, and so it's really important that you cash the check quickly, because if you don't, and we can't reallocate funds, it's going to be very burdensome to other providers or to us. So we are going to make sure you normally have 90 days from issuance to cash the check. But we are going to actively work this list. So if we find that in 60 days you didn't cash it, we're going to try to be noticing you to say, hey, get your check cashed, or we're going to take back the money, void the check, and move you out, and move on to redistributing your funds. So it's really important that you get the money, you cash your check. Some people we found in the CARES Act got the check, and then they determined they didn't really want to participate because maybe that was too confusing, or there were other funds that they thought would duplicate. So they returned the check to us. If you do that, we will also remove you from further distributions, assuming that if you don't want to do it in the first, you're not going to want to do it in the second. So the second allocation calculation, I did get a lot of questions about this. And again, maybe I wasn't clear enough in my first presentation, but for the base period, that is what we consider the first allocation, and it's looking backwards. It's looking back from 4/1/2021 through 3/31/2022. For the second allocation, it's looking forwards from 4/1 through this current period up to 3/31/2023. So if you're still expending funds or you haven't done it yet, and you go, gosh, this would be a good way for me to spend the money now and be reimbursed for it take those eligible categories and make a retention bonus that meets that requirement. Make a bonus pay that meets that definition, and you will be reimbursed for this period. And we're going to start those calculations sometime in December or early January. So one thing to note is if you had $30,000 allocated to you in the first go round and you had 0 expenses, you can count on those $30,000 and you apply. You can account on those $30,000 going forward, at least. And then there may be some funds that we roll over or that we take from other providers that were interested or failed to apply, and there will be money available to you. So it's really important that you understand there's the backwards one, but you have to apply whether you had 0 or not, and then you can roll it forward and we can give you a second allocation. June 30th, we're dreaming about June 30th right now. I know I am, so I hope you all are too. The notice of the second allocation will be sent, like I said, in January, given we're able to do everything we want within the timeline. We're working really hard and fast on this, and so I hope that we're able to distribute this that quickly. Our next steps will be to send you an email with the procedure that's written out, the letter of allocation that says, hey, Lynn's Place, you're getting $22,000 allocated to you for reimbursement of eligible expenses. You'll get the attestation form and you'll get the application form. And with those clear instructions to submit the attestation form and the application form back to the ARPA mailbox no later than June 30th, and make sure you have, you know, the right people signing. Trying to think if there was anything else that I missed that I was going to tell you. So again, if you know what you spent in that base period because it's already passed and you've already done your financials, don't wait till June 29th to submit the form to us. Please, please, please begin submitting as soon as you get your letter. That will help us process. I will tell you there are about 539 providers eligible for this fund. And that's a lot of letters for us to go through and a lot of forms for us to handle. So our partners at Healthcare Services are standing by to write checks. I have some internal folks here that are standing by to assist. Melissa Mead is helping me, and Caroline and our internal group. And we have someone from Jason's shop at Healthcare Services, Jason Ball. Tracy Marshall is standing by to assist with updating your MMIS contact, authorized agent. So we're all ready and waiting to help you through this, but we will not be doing that on June 29th if you wait until June 29th. So please, 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 if you have it, apply and get it into us. And if you have any questions, please reach out quickly. And we will try to be as responsive as we possibly can. Again, email the ARPA mailbox if you have questions. It's the best way because multiple people have access to that mailbox, and we are keeping a contact log, and would be it's the easiest way to make sure it's funneled to the right location. And that is my whole presentation for today. I'm happy to hear any comments or questions.
Thank you, Lynn, for this great information. And we did receive some great questions here. And
Okay.
the number one question was, how will we get this information? And you answered it at the end. We're going to be sending an email with attachments that are the forms. And the other question, the next highest question is when? When will SDS send those out?
Mm-hmm. Sure, that's a great question. We actually have the list all together of the eligible pool. I have all of the allocations figured out. We're working on a mail merge with the MMIS agents from Healthcare Services. And so we have all of the information in one place, and we're hoping to begin mailing those out as early as Monday, I believe.
Okay.
Mm-hmm.
All right. Thank you for that. Other questions? Will we get confirmation that you received the application? Will the provider get confirmation that they emailed it in to hss.dsds.arpa@alaska.gov? Will we let people know we got their materials?
I think we can do that very easily with a reply email to say thank you received. I'm gonna take some notes here while I'm at it, because these are good questions.
Mm-hmm.
Mm-hmm. Yes, I think we can do that pretty easily.
Okay, great. How does a provider know how to find out who the authorized agent is in MMIS?
That's a very good question. I am not absolutely sure of that, and I don't know if anyone on the phone could tell me that. I'm not sure Jason is on, but I think you can go into your portal, and maybe actually another provider might know the answer to that on the phone. But I think you can go to your portal and see who the agent is, and the form is all that I was able to get from Jason at this point. But we might be able to, if you email the ARPA box, I might be able to get an answer for you.
Sounds good. Thank you. Okay. There's a question about retention bonuses. If the agency has retention bonuses at 3 years, can they still apply and ask for funds for 6-month retention, or is that considered duplicate?
I'm sorry, could you ask the question again, Kara?
Sure. An agency has retention bonuses at 3 years. Could the agency still apply and ask for funds for a 6-month retention, or would that be considered duplication?
No, if you, so I'm going to repeat the question back, or repeat what I think I heard, is that the agency has a policy that they pay a retention bonus for 3 years. I think that still applies for this. It has to be at least 6 months or show a commitment to the company. And obviously 3 years is a pretty big commitment. So I would say they are very much eligible for this funds. Yes.
Okay.
As long as it was during the base period. So you can't claim funds from 3 years ago, but if you paid out those bonuses during that base period, yes, please submit those.
Okay. For overtime in the second allocation year, will the provider be expected to still compare overtime figures from April 1st of 2020 to March 31st of 2021, just like the first allocation?
Yes. Either that, or they have to be able to give specific reasoning, like we mentioned in the other examples, for a COVID-related reason or a shift coverage region because you have a house that's, quarantining, some reason like that. Then if you can show those individual times, you could use that as evidence, or you can compare reports from a pre-COVID year, because we're still in the public health emergency, so it would apply.
Okay. Folks did understand that they need to do an application per Medicaid number, but a clarification on that, do they still have to do an application per Medicaid number even if they don't bill for DSP work on a particular Medicaid number?
So if they have no DSPs in a particular Medicaid number, and I'm trying to think of an example of that, then they shouldn't be claiming expenses under that number at all. And they would want to let us know that, you know, if we did something in error, and trying to think of an example, you will not get an allocation for someone for meals, for example, because we pulled them out. So you're only going to get an allocation for, say you're a provider and you have meals, transportation, respite, and day hab. You're going to get allocations for your respite and your day hab because they're part of Table A. You're not getting any money for meals and transportation. So once you're reimbursed, if you expended for the day hab and the respite, and we pay you expenses, we reimburse you, once that money is reimbursed to you, if you pay someone else, that's up to you. That's a provider decision. But you shouldn't be submitting expenses for us for anyone in your meals or transportation areas. Okay. Hopefully that cleared it up.
Yes, yeah, that clarifies it. Okay, if an agency used the PPP loan forgiveness to pay for these funds, would that be considered duplication?
Yes.
Okay. Finding my next, just scrolling for my questions here. And the email, in case you have questions or you feel like you missed our email to you, is going to be hss.dsds.arpa, ARPA, at alaska.gov. And I did write that into the chat. And we have to, it's a couple questions about attestations. So a provider needs to submit attestations for each provider ID. Is that correct?
Correct.
Okay. So this one is about the total amount. Is it 18 million for the first year and then the remaining for what time frame?
Good question. So it is, we have calculated that there is approximately $20 million that would go towards this fund eventually. But because we're at year end, sometimes there's adjustments that have to be made behind the scenes that we don't want to over expend and then have to say, oh gosh, you know, how are we going to pay the feds back? So we've decided to be very conservative and give 18.5 million towards this first allocation. Then once that 18.5, say, let's give an example and say everyone submitted all of their expenses and we went through all $18.5 million in the first allocation. I don't think that'll happen, but if it did, then we would have, once we're done with all of our behind the scenes adjustments, we would still have $1.5 million to put into a second allocation. If there were any remaining funds from any providers, we would redistribute those. We would roll over. So this, just to be clear, if Lynn's place, she's pretty smart, I will say, she wants the money, she's going to take her allocation, and let's say she had $30,000 in her first allocation, but she only spent $15,000 for reimbursed expenses. Her $15,000 would roll over to the second allocation. And then Caroline's care, you'll see in my examples under the plan, Caroline didn't submit the form in time. She had zero monies that she spent. So she had $147,000 that's going to get redistributed to everyone else. Lynn is going to benefit from that because whatever percentage Lynn has will be a part of that $147,000 added to her rollover fund. So she would have that in her second allocation. I hope that answers the question. Mm-hmm. So our goal is not to keep money. Our goal is to distribute all the money. And the fastest we can do that, the more I can go back to my regular job. So I'm happy to distribute it all, but I want to make sure that everyone understands that, you know, be fair and be conscientious of the duplication for last year's stuff. And you won't lose out if you apply by June 30th for next year, for this current period.
Okay, thank you. That helps. So regarding the duplication period, a few of us are just clarifying, is the duplication period that same 4/1/21 to 3/31/22 for CARES Act, PPP, and PRF?
I'm assuming, and this is a big assumption from my part, because I haven't done a lot of research into it. I apologize for that. But I'm assuming that those funds were either 20 or 2021 that you were reimbursed for those funds in. So if you've already expended those funds and you've already used those, the duplication would apply for that period. If you no longer are spending CARES Act funds or PPP funds or any of that in this current period, it wouldn't be a duplication for you. Now, if the federal government came out with a brand new, say we have another, heaven forbid, knock on wood, another big spike, and the federal government came out with some kind of a relief for you, you would have to carefully consider future packages from duplication. But those ones that have been expended already can't be duplicated in this particular year.
Okay, thank you. An agency has offered a cash card bonus for their DSPs who provided a copy of their vaccination cards. Can that be covered under the reimbursement under the vaccine section?
So that's an interesting question. We did say no to gift cards because gift cards in an audit are difficult for us to trace and track and make sure that that employee got the gift card. Because you could say I spent, and believe me, we've had unscrupulous agencies that have done this. Say, you know, I spent $50,000 on gift cards and then find out that no employee ever got a gift card. That would, we would want to be able to hunt that down. So I think with the vaccine, if you have something that says the person was vaccinated and they signed for a gift card or you sent a gift card, we may consider that as an incentive depending on how much it was. If you have the accounting to back up for each one of those, and I picked up the phone and called Kara and she had actually gotten the $100 gift card, I think that would be okay.
Okay, thank you. Regarding overtime, going forward, can we keep records in our payroll system that would be specific to the reason for overtime, that the reason was overtime was COVID related?
Yeah, as long as it meets one of the requirements in the definitions, I think that would be a good way to denote what you would want to be reimbursed for. Yes, just like you would do for your taxes, you could do for this particular fund.
Okay. All right. Any other questions? I don't see any new ones at the bottom of my list. I went all the way back to the beginning of my list and I think I got them all.
Those are good questions. Always good questions.
Yeah. Okay, here comes one. Are the bonuses all reimbursement based for the first distribution?
Yes. So we don't, none of this money is like a grant to give a bonus. That's the hard part about it. It is a reimbursement. So you have to have the money to invest in your workforce to begin with, rather than us giving you a grant to fund your workforce. So it's only for reimbursement.
Okay. And we will have the recording up on YouTube rather than distributing all the slides. And
yes.
Everyone will get the link to the YouTube channel in a return email after the session. Give us at least an hour. It takes a while to upload to YouTube. Other questions? Okay, not really a question, but a comment. Hang on just one sec here. Thank you, Lynn and team. Thank you so much for all your hard work on this. It is much appreciated. And the turnaround time on the email specific for ARPA was so fast. Thank you again for all the hard work. Sure. Nice to hear. Thank you.
Yes, very welcome.
Says this is really well done, presentation and preparation.
Thank you. It's been actually really a fun thing to be able to do, though it is work on top of our already existing work. I think everybody feels very strongly about the commitment to our providers and our direct support professionals. And, you know, any of us that have actually worked in the field, which a lot of us have at SCS, we definitely understand how difficult it has been. So thank you for that, and thank you for all of your hard work all through the whole pandemic.
Yeah. Other questions or thoughts to share? Folks are saying thank you. It's been a rough few years. Yes, it has.
Yes, it has.
Been rough on everybody all around. Yeah. Okay. Well, we don't have to stay in the session the entire time. We, like Lynn said, we really just booked it out in case we needed extra time, and everybody likes to leave early rather than having to stay late, you know, to get the conversation done. So, okay, here's a question, right? It says OT reimbursement. Is it just the 0.5 or all, meaning OT minus RT equals OT reimbursement?
I think it's not occupational therapy.
Overtime.
Oh, regular time. So I'm
Regular
thinking,
time.
see, here's my, I am a recreation therapist, so I'm an RT. So my mind immediately goes to RT, OT. Regular
overtime
time
versus regular time. Yeah.
Yes, it's just the overtime. It's not the regular time.
Yes.
So it's only the difference of the overtime. Correct.
Okay. And the writer says Roger that.
Yeah. Or recreation therapy.
It's okay. We have a lot of acronyms in our world, so it's okay. He says thank you. Yeah. Okay. All right. I'm not seeing any other questions come in. So we'll go ahead and close our session. Again, you know, right now is not the only time that you have to submit a question. You can always submit a question to hss.dSDS.ARPA@alaska.gov. I'll write it again in our chat. And if you would consider visiting our YouTube channel, that would be great. You can also like and subscribe to it if you want to get notification for all the videos that we put up. If you don't want to get notification, don't worry, you don't have to subscribe. But we do put a lot of our public outreach up there, and it might be helpful to you. YouTube channel name is SDS Training. It's pretty simple. If you want to search for it, you can. And I think I have the link handy, and I can put that up again. Here it goes. And it's just called SDS Training. All right. Well, we'll go ahead and close our. Yeah. Thanks everybody for attending today. We really appreciate your time given to this topic, and thank you, Lynn, for a great presentation. Anything you want to say as a final comment?
Nope. keep doing the hard work and the good work, and thanks for all the support from providers and from, you know, our training team, our division department partners. I mean, everybody is all in on this, and so just want you to know that up to the commissioner's level. So thank you.
Okay. All right. Have a great afternoon, everybody. Goodbye for now.
Bye-bye.